Hello, this is the Daily Market Comment by Rafi Boyajian. I'm Cristina Marujos, and thank you for joining us at xm.com. The feigned optimism that U.S. President Trump and Chinese President Xi will be able to resolve some of their trade difference faded late on Monday after a senior U.S. official revealed that Trump would be comfortable with any outcome from the talks scheduled at the G20 summit. U.S. and Chinese trade officials agreed overnight to resume trade negotiations in preparation ahead of the high-stakes meeting, but this wasn't enough to lift sentiment. The uncertainty about the prospect of a breakthrough at the June 28-29 summit dragged risk assets lower on Tuesday, as investors are unlikely to take big positions until the talks have concluded. China's blue-chip CSI 300 index ended the day 0.9% lower today, and U.S. and European stock futures were pointing to losses. The safe haven gold, which tends to benefit from risk aversion and geopolitical tensions, surged to a fresh 6-year high. Further supporting gold on Tuesday was the announcement by President Trump of new sanctions on Iran, which target key figures in the country, including the supreme leader. The move, seen as largely symbolic due to the limited number of sanctions remaining that the U.S. can still impose, threatens to escalate the situation even as the Trump administration attempts to push Iran to the negotiating table. Aside from gold, the Japanese yen and the Swiss franc also gain on the increased risk-off mood, particularly against the U.S. dollar, which is under pressure from burgeoning expectations that the Fed will cut rates at its July meeting. With U.S. rate cut expectations running wild, investors will be carefully watching what Fed policymakers will signal from their scheduled speeches later today. A number of Fed officials will be hitting the podium, but the spotlight will be on the Fed Chairman Jerome Powell, who's due to speak at 5 o'clock in New York. Investors will be eagerly wanting for more hints from Powell and co. that rates could be cut as early as the July meeting. However, with traders possibly getting ahead of themselves, there's a growing risk that the Fed may not live up to the market's expectations, opening the way for a major correction in the dollar and bond prices. This was today's Daily Market Comment. Thank you for watching us at xm.com.